Topic: bull market versus bear market mastery, bull market basics. I'm starting with bull market. In a bull market, you will see price trending upward. You lean towards taking long trade setups to trade with the overall upward market momentum. Short trade. In a bull market are risky, as there are short-lived and just collected pullbacks behind the uptrend continues. Even if you still make mistakes on your trade entry, it might still end up in profit as you are trading with the flow of the true market direction. Heading: bull market from a stock market perspective. Now, the stand of a bull market is when prices on a financial market are trending upwards, and when there is a 20% rise in a major stock market index. There is an overall positive, optimistic market sentiment which leads to more buying than selling and results in an uprise in depreciation of an asset. Heading: bull market identification through price action. Now let me show you how to identify a bull market through price action. The first way to identify a bull market is higher highs and higher lows. Here is a moving uptrend. Notice how it moves. Swing high is higher than the previous swing high. Notice how the swing low is higher than the previous swing lows. That means price is making higher highs and higher lows, signaling a bull market and moving uptrend. Knowing this, you lean towards taking pullback long trades at support levels and areas of value within the moving uptrend and bull market within the moving uptrend and bull market. Another way of identifying a bull market is consolidation pattern plus break above pattern. 1, by impulse move up. 2, any consolidation pattern from this list, triangle pattern, wedge pattern, channel pattern. 3, break above the pattern, which signals the bull market and uptrend will continue. This is where your long entry point would be, as it shows the consolidation is over and that the next leg of the uptrend and bull market has begun. It shows new buyers have stepped in to continue the push upwards, which resulted in the break above the pattern instead of below it. Another way of identifying a bull market is identifying massive bullish engulfing candles forming often that are larger than all other candles around them. These shows there is heavy buying presence in the market and that the bull market is fully intact and will likely continue. The way to easily identify the bull market is when you can easily place a trend line connecting the swing low points. Another way to easily identify a bull market is when you place a trend line connecting the swing low points. These swing low point allows you to place an upward slanted trend line connecting them, showing that this is a clear uptrend and bull market. Trade opportunities present themselves at the trend line. The fifth way to identify the bull market is when price is clearly above the moving average. This is a 50 exponential moving average. You can use whichever moving average works best with upper overall strategy. Notice how the price is clearly above the moving average and not chopping through it, which shows prove is clearly in an uptrend and in a moving bull market. Now let's get into how to identify the end of a bull market. The first way to identify that the bull market is coming to an end is to identify a lower high that forms first. You have a moving uptrend to a higher highs and higher lows. You then have a higher low that finally forms, which signals an end to the bull market and that a bear market has begun. The second way is to identify that the bull market is coming to an end is to identify a lower low that forms first. You have a moving uptrend to a higher highs and higher lows. You then have the first lower low that finally forms, which signals an end to the bull market and that a bear market has begun. The third way to identify the end of a bull market is to identify a consolidation pattern and a break below the pattern. You have a moving uptrend. Price then forms a consultation pattern. It could have been any pattern from these lists, but in this case, you had a descending triangle pattern, wedge pattern, channel pattern. Price then breaks below the pattern and in the opposite direction of the larger moving uptrend and makes a lower low. This signals the bull market has begun. The fourth way to identify that the bull market is coming to an end is to identify a massive bearish engulfing candle. You have a moving uptrend. You then have a massive bearish engulfing candle that forms that is larger than any other candle around it. This signals the bull market is possibly over and that a bear market has begun, as it shows heavy selling presence and that buyers are taking profit. The fifth way to identify an end to the bull market is to identify a massive gap down occurring. You have a moving uptrend and you then have a massive gap down that occurs, which signals the bull market is possibly over and that bear market has begun, as it shows heavy selling presence and that buyers are taking profit. The sixth way to spot that the bull market is coming to an end is to identify a trend line break below. You have a moving uptrend and you have slanted moving trend line connecting the swing life points. One price breaks below the trend line. This signals the bull market is over and that the bear market has begun.